Welcome back. Well, tax collection is the only way that government generates revenues, and National Treasury is already struggling to close a revenue shortfall of over 27 billion rand, with revenue collection deteriorating significantly. So, what are the plugs likely to be this time, given that the VAT hike has already been pulled as one of the tools out our box? And with an election upon us, does the Finance Minister have the luxury of going down the tax hiking route again? I caught up with David Warneke, who's National Tax Committee Chair at SAICA and partner at BDO. Here's his response.
Yes, I do think that we are unlikely to see tax rate increases for a number of reasons, one of which you've mentioned is the election. But the other important thing is the very, very poor rates of economic growth that we've got in South Africa. And I think that the economy simply can't take big tax hikes. So I think we're very unlikely to see increases in rates this year.
Okay.
So I think that there will be a combination of other things to raise revenue or to save revenue. It's a very, very difficult balancing act, of course, this year, as we all know. The rating agencies are looking very closely at what the budget contains, and especially in terms of the debt level. Mm-hmm. But I think that what we'll probably see is that we'll see SARS beefing up its efficiency of collections. I think that's the one route that they are likely to throw money at this year, which hopefully will produce a good return. So, for example, the large business centre, which is being redeveloped, reformed currently, I think that's going to be very important in getting in the money that's owed to SARS.
This is an investment SARS has been chasing for the longest while now, improvements in actual revenue collection, closing the loopholes, eliminating tax avoidance. How are you rating the kind of progress they are making on that front?
Well, I think it's a bit difficult to say what progress they're making in terms of collections. I think what makes it difficult to assess really is the state of the economy. So we've got two effects going on, because we've got, yes, there is a collection drive, but then on the other hand, we've also got the slowdown in economic growth in the economy, which makes it difficult to assess. But I do think that what we can expect going forward is we're going to see more tax audits carried out, especially on the larger taxpayers. I think that we are going to see anti-avoidance gaps plugged. So I think there'll be a focus on transfer pricing. I think that unit within SARS will also be beefed up. And as I say, I don't expect much on the rates at all. Yeah. Certainly no more VAT increases or anything like that.
No more increases. What about the capability to increase on the creative side? So the minister becoming a whole lot more innovative in actually widening his ambit.
Yeah, I think that in terms of widening, stuff like stealth taxes, we saw the sugar beverages levy introduced last year. We've got various environmental levies, so maybe those could go up, and that could be a source of revenue. But whether it's going to make really a huge dent in terms of collections, it's difficult to say. What we do believe is that National Treasury, since the medium-term budget, appears to have been quite efficient in terms of sticking to its expenditure limits. And so we think that there probably would be, possibly that we might see that the budget deficit might not be quite as large as what was predicted at medium-term budget time. Obviously, that would be very good news, although it does seem that collections have been a bit more sluggish. But I think that the containment of expenditure sort of balances that out.
Bulk of the focus, and of course this with personal income tax having been the largest contributor to total tax revenue, is often in the limelight. I want to draw attention to company income tax. Is there any scope to accommodate increases on that front, bearing in mind that many have already said it would be counterproductive, given that President Ramaphosa has been on this drive to attract foreign investment into the country?
Yes, I think you've put it well, because I think that there isn't much scope for raising corporate tax rates. Our corporate rates are already high by world standards. We see the trend internationally is for corporate tax rates to actually decrease. And so we're lagging behind in that. So I really
at
can't
28%,
see, at 28%, it's already pretty high.
Okay.
Yeah. So by international standards, it's it's
relative to what?
Well, relative to our major trading partners. If you look at the tax rates in the UK, those are dropping. The same trend is visible in the States. Although they're not that high relative to other African countries, I do think that the relevant benchmark, especially in terms of attracting foreign investment from jurisdictions in Europe, for example, would be to benchmark rather against those rates rather than against other African countries' rates.
David, the tricky bit comes in with the South African tax base already severely strained and a number of available revenue streams pretty overextended at this stage. Do you see a tax revolt coming to the fore until government actually holds accountable those who have contributed to putting the country's finances in dire straits?
Alicia, in short, no. I don't think a tax revolt is practical at all because what one needs for a tax revolt, I mean, look, firstly, from a SAICA perspective, we don't condone, not complying with tax obligations to begin with, I must say that. But even so, just considering it from a practical perspective, one needs big business to come on board. Because ultimately it's big business that withholds personal income tax, which, as you say, is the major contributor of the different tax products that there are. And that largely comes by way of pay-as-you-earn withholding. And they're simply not going to do that for a number of reasons, not least of which is the draconian penalty regime for not paying taxes on time. And those penalties definitely can be collected, by SARS. So there's definitely the legislative scope for collecting those penalties. So I really don't see that a tax revolt is going to happen.
That was David Warneke, who's National Tax Committee Chair at SAICA and tax partner at BDO. And that's all we have time for at this hour. Stay tuned for Stockwatch straight after the break.